This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradleyAbove at the top of the screen and everything that we're talking about here today. So let's go ahead and get into this. Guys, I use many different layers of protection to protect myself online, and one of the ways I do that is through Pure VPN. I do have a link in the description box and the comment section for you guys. By the way, there's a Halloween special going on right now, 62% off on a one-year plan. So make sure to check that out and all the other things that I have in there for you guys. Let's get into this. The numbers this morning. Bitcoin raging now over $13,000, 397 cents. That's amazing. Go Bitcoin. Ethereum, $401.41. XRP is 25 cents. Drilling down on the numbers, 0.2512, 11.3 billion plus for the market cap. We are down 1.2% on the 24-hour at 1.5 billion, almost 1.6 billion on the 24-hour. And the total circulating supply, which is now changed and come up by 18 million. Thank you to Hiding Out Now for that and finding that, screenshotting it and sending it to us. It is now 45,266,000,000 plus. Whenever I see the total circulating supply come up, most people think, oh, they're watering down the market and that's how the price stays low. What I see is there's more demand for liquidity, so there's more to the supply to be able to meet that, to keep a tight trading range as the price prepares for what I consider to be mass adoption sometime here, not to the distant future, is the way I see it. Because I realize that this is built and intended use for XRP is for the largest financial entities of the world, from central banks to payment providers to small, medium enterprises and remittance companies. So, and settling the entire derivatives market at some point too. So, just to get that out of the way, let's go ahead and get started, because today we're going to look at some information. By the way, it's about mass adoption here. And I'm not just talking about retail consumers. What I'm talking about is banks and really getting the clarity we need. So we know that clarity is what we need here in the U.S. And we know that we've been told that there's clarity in other places of the world. We're going to see evidence of that as well. But I think what the bigger picture here is that you're going to see a narrative today that really shows you that not only is there mass adoption happening with crypto around the world, but there really is an understanding that banks, traditional banks, are about to dip way heavy into crypto and offering the products and services. That day is coming, I think, a lot sooner than people realize. And I think you're going to see some evidence of that today. Let's go ahead and get started, because the backdrop of all that good news is based with the backdrop of the U.S. stock markets have the worst day in a month because of the pandemic, hits a record in number of cases. European markets also dropped after SAP warns on lockdown hit to demand. So, we're seeing a flare up in cases. We're moving into the fall. We had this talk back in the summer where they were talking about, seasonal things, and you're going to see this thing rise a bit. So look, we keep an eye on it, but the reality is it's much bigger than just the pandemic, right? The new data suggests a stock market crash may be imminent. Now, we have covered this before as well. Shout out to DJ Peter Vass and XRP Crypto Wolf and Michael Val 5 Links, Bond Crypt, and Jesus Tejero, and all of you out there that send so much great information. I appreciate each and every one of you. New data suggests a stock market crash. And we just went over this not long ago, where some price analysts and experts, analysts in the market, are predicting as much as an 80% crash in the stock market. Well, I'll tell you something, I'm not a financial advisor, but these signals are getting pretty strong, and they're coming from a lot of different directions. And you can't say that you weren't aware, that you didn't know, because we've talked about this, a lot. So this is the backdrop here. If these things in fact do come to fruition, it's no surprise why banks would be wanting to shift and move gears, and other industries and companies want to shift gears to get a position or at least start building products and services in the digital realm. So let's keep this moving here. Okay. Billionaire Ant founder set to raise $35 billion in biggest ever IPO. Jack Ma's Ant Group company is set to raise $34.5 billion through IPO Shanghai, Hong Kong, which will rank as the biggest IPO ever and make it one of the most valuable finance firms. Shout out to Jack Ma. This guy, whatever he does is big, right? Alipay, Alibaba, Alipay, now Ant Financial. I mean, this is just really remarkable. This is going to be something to see. Remember, Ant Group was trying to buy MoneyGram, got turned down by the U.S. government. They refused them the opportunity to be able to buy MoneyGram or partner with them. And then along came a company called Ripple that did it soon after. Pretty interesting. All right. So someone just sent $1 billion in Bitcoin, paid only $3 in change in fees in back-to-back transactions this morning. This was done with a Zapo account wallet to other wallets, and that's over $1.1 billion in Bitcoin, and the fee was $3.54. The article, and I'm not going to open it, read it to you, but the article makes a great point, and this is where we start to get into the thumping of where we're going, the beating of the drum of where we're going, and banks know it. And you're going to see evidence of that here in just a second. Because the reality is if you wanted to send $1 billion from your bank to somewhere else at let's say $250,000, right? I think they said it would take like 13 years. That's incredible, right? I mean, it's just unbelievable. It would take a very long time, right? It would take years or what have you to send that much money because you can't send that much at once. And you're certainly not going to send it for $3.54, right? It talked about the fees on that. If you were to do it in the bank and the current standards of today, then you're talking about sending something and it costs $100,000 or more to send it in those increments, right? So banks are well aware of what this is. They know what the writing on the wall is, and they're going to make the adjustment. They will not miss this. I don't care how much it seems like the U.S. and other areas of the world may going to, miss this fourth industrial revolution. They're not going to. They're not going to. I'm telling you that right now. And if they do, they'll get swallowed up. And I don't see that happening, at least not for the U.S. Prelude to the digital euro, European Central Bank joins the CBDC race. You don't say. You don't say. Well, of course they do, because it's exactly like we just showed you, right? You have a horrible market that's getting ready to collapse. And then you see the imminent danger of not getting into this digital tech race, this blockchain crypto space, however it suits your business model. I just put out a video last night, if you haven't seen it, of Glenn Hutchins and his son, James Hutchins. They are venture capitalists in this space, and they know an enormous amount about what's going on in this space because they invest in these companies. They invested a part of a digital currency group. He's a board member on there. They've invested in Coinbase. They've invested in Ripple, right? So they understand where they are in this space, and everyone knows that now is the time because, Glenn Hutchins made the point that he's really heavily involved in building companies around the blockchain and crypto tech, right? And being able to create a company that can be better because it uses these things, or create a company or get a company to come into this space that can offer better products and services because of these things. So that is really where we are. And he pointed out very succinctly that we are in that growth period in this space as well, that you're going to see a lot of companies come in and either adapt the tech or create products and services around it. So either making the company better or being able to offer more to their customer base. So pretty exciting. And obviously it's the same thing for banks. Of course they're going to get in the CBDC race. Where the hell else are they going to go? Home? India's regulators have created a framework for fintech regulatory sandbox. Really? Because just a few weeks ago, everybody was trying to put out news that said India is banning cryptocurrency. Well, now they got a sandbox to play in. You can't make it up. Mass adoption, people, mass adoption. And you know what? On the heels of that good news, guess who said, I'll play in the sandbox with you? British fintech firm opening 34 physical crypto bank branches in India. That's right. Kasha will be partnering with India's United Multi-State Credit Cooperative Society. Come on in. And they will be offering Bitcoin, Ethereum, and XRP, its native token CAS. There you have it. There you have it. And we keep going because when we think of digital currencies and banks that are digital currency friendly, it's Silvergate Bank all day long, right? Crypto friendly bank Silvergate saw a 40% increase with all of the things we just talked about. A 40% increase in deposits from digital currency customers taking the bank and adding another more than $500 million. More than $500 million, $586 million in new deposits from cryptocurrency from firms and individuals in the cryptocurrency industry in just the third quarter. That is an impressive number. And don't think, I know it, in the grand scheme of things, when you think about trillions of dollars and hundreds of billions of dollars to banks, they're seeing these numbers, they understand, and that's why everybody's building a CBDC, and that's why they're about to get in this game much deeper than you think. Why crypto banks are essential for mass adoption of Bitcoin and Company by Darius, and I'm not going to mess up his last name. This is a cool article, but it says, a crypto bank is not a contradiction, but an enabler for making crypto assets mainstream and crossing the chasm of new technologies. Absolutely, it's a great point. But I will tell you, remind you, these big traditional banks, a part of this growing emerging market is when you see these acquisitions and mergers that take place, because the traditional banks will start to buy these exchanges, just like you see PayPal in talks to buy BitGo, I believe it was, right? So this is the kind of motion and growth that you're going to see. They'll say, hey, you know what? You guys have done a great job building out this space. Let me cut you a check and then you guys can go fishing. We'll take it from here. This is the kind of growth that's going to happen. You're going to see these massive traditional companies and banks come into this space and go, look, I don't want this guy across the street offering these things. How about I just buy them or partner with them, and then we got it covered right there. And that's how you really get a space to really accelerate in its growth as well. Right? All right, let's keep this going here. So then we see Ethereum, shout out to XRP Crypto Wolf, is powering twice as many transactions as Bitcoin and approaching $1 trillion settled in 2020 alone. Much of this activity is attributable to Ethereum stablecoin volumes. Tether now transacts more daily than Bitcoin. Most of the volume is ERC20 token USD Tether. Listen, this is, to me, wow, you talk about a high sign. Approaching $1 trillion settled in 2020. Are you kidding? That is massive, that number right there. And for all the flaws and the climb up the mountain that Ethereum's got in front of it, that because they want to switch from proof of stake, to proof of work to proof of stake. That is an impressive number. And it goes to show you the demand for smart contracts and how the ease of use of the ERC20 token is on that network. Got to give it to them. All right, so here we go. Many banks are now in search of cryptocurrency support. Here we go. What did I tell you? These banks aren't going to sit on the sidelines and watch all these digital banks, these neobanks jump off, and all these crypto platforms get banking licenses. Many banks are now in search of cryptocurrency support. Well, you're going to see even more evidence of it here too, because this comes from Panda Ripple XRP, breaking Singapore's largest bank, DBS. Is the largest bank in Singapore is launching a fiat to cryptocurrency exchange. Say it isn't so. Yeah, this should be scaring the daylights out of regular cryptocurrency exchanges. If you want to stay in this space, you better be doing some great things, because I'm telling you, you're going to see a lot more of this, and it won't just be in Singapore. Hands down, as I'm sitting in this chair, this is what's going to be happening worldwide right here. Again, PayPal making a move to pick up a cryptocurrency platform themselves. You're going to see this roll over into more banks domestically here in the States, especially as we get closer to sorting out this last bit of clarity. Here we have something from Michael Val 5 links. The U.S. Commodity Futures Trading Commission has issued a new advisory to the Future Commission merchants, FCMs, holding digital currencies in segregated accounts. Now, this just makes sense. I mean, this is where you start seeing, like, look, the traditional understanding and structure of the traditional markets. You know, you're not going to just keep everything in one big pot, right? We need to keep that stuff separate, and there needs to be accountability, right? And if we need to go in and do any kind of audit or anything like that to the company, we're going to make sure that the funds are separated so we can easily track what's going on. Building on that notion, we go on here, and the current administration concerned that the SEC is dragging its feet on digital currency as China races ahead. SEC Chairman Clayton is not doing enough to counter growing Chinese dominance in digital currency, which will harm American companies in the future of currency. In the future of currency, not in the future of commodities. You know, I drilled down on this article, and it really does talk about the fact that Jay Clayton had stopped short of saying that Bitcoin and Ethereum were not securities, according to the SEC, and did not go any further than that, you know, a couple years ago on that decision. Then Senator Tom Cotton also expressed his sense of urgency for what needs to happen, and that the SEC needs to voice their opinion and make it clear, on the matter here of what's going on with cryptos. And especially, he doesn't cite XRP, but for us as an audience, we know all of this would be very good for XRP to have that kind of clarity. So this is what's interesting to me, because, you know, it says right here, you know, it talks about it, and I'm not going to find it here, but China's head start in digital currency could potentially put Chinese Communist Party in control of the world's payments and currency. Right there. Now, this is not the first time we've heard this narrative, whether this is Breitbart or not, right? But the point is that there is a consistent narrative here that we need to hear and get the clarity that we need, right? What's interesting about this is it does highlight in here how so far under Clayton, the SEC has concluded, and I'll just highlight it so you know where I'm reading from, that only 2 digital assets should be considered non-securities regulated under the Commodity Future Trade Commission, which is a better regulatory environment than the SEC. It says those 2 digital assets are the Chinese-controlled Bitcoin and Ether. And that is well said, because that is absolutely a truth. Now, you don't have to believe it, but it's still true. And it is interesting to me that they've been given and granted non-security status there from the SEC, but yet we know, and everyone knows, it's a tabletop discussion that, you know, the majority of it is controlled out of China for those two coins. So yeah, this gets pretty interesting. You know, for me, I think the biggest thing is that we not lose sight of this. This has been the biggest news right here, and that is the Federal Reserve and FinCEN, connected to the Treasury, have a proposal to lower the threshold of reporting for transfer of funds for cross-border payments, and even inside domestically the United States, from $3,000 to $250 for any transfers. It is outside the United States, that go outside the United States. But the bigger part of this is that the proposal would also widen the agency's definition of money to explicitly include cryptocurrencies. That is really what we need to happen, because if we get that definition to explicitly include cryptocurrencies, I am reminded of when we had Corey Johnson at Ripple, and he made the comment, we may never hear from the SEC. And if you get the definition of money from the Federal Reserve and FinCEN to include explicitly cryptocurrencies, it would be money. And at that point, we don't need to hear from the SEC, and we may never hear from the SEC. All right, that's going to do it for me. Mass adoption's on the way, and it's not just the retail consumer, it's banks all over the world. Singapore's largest bank is actually offering cryptocurrency exchange platform from fiat to crypto. It's amazing where we're headed, and we're going there quite quickly. So, all right, hit the like and subscribe, leave a comment below, make sure you share with somebody you know. Check out all the links in the description and the comment section. They're all great stuff. I use each and every one of them, and you may want them too. I'll see all of you on the next one.